What's going on? Welcome back to Financial Journey. So today we're going to talk to you about Serve Robotics. I want to go over some of the current data points, break it down on what's been really coming out from the company itself, the many SEC documents, and everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So starting off, Serve did go down 4.12%. My last video, which did come out last Sunday, since then it has gone down 8.25%, which given Serve is a very big momentum play, somewhat reasonable, right? The broader market did go down quite a lot this last week, and plus at the same time, the fear and greed index is under the fear category, so people's appetite for risk just isn't there. So kind of makes sense the fact that obviously they did go down, but there was no actual news from the company itself. So last news was on September the 4th. So they are going to be participating at the H.C. Wainwright Annual Global Investment Conference, and that is going to be held tomorrow at on the 9th between 10 and 10:30. So hopefully that's going to be a good thing. I think it's just going to be a general presentation overall just about Serve, what they're doing, current circumstances. So I don't anticipate any new information, but still it might bring light to Serve and more draw attention to it. So again, that could be a good thing, but there has been quite a lot of SEC forums, as you can kind of see. So I want to go over a lot of these documents and what it's truly saying. So pretty much my last video was right before this, give or take, somewhere around here. So starting off with the Form 4s, those are pretty easy explanations. So a lot of these insiders, so this one is the CFO, did acquire some stock. So this individual right here, so Brian Reed, did acquire 30,000 shares, and it kind of goes over the explanation right here. So nothing really crazy. It'd be nice if actual insiders did purchase using their own money, but whatever, it is what it is. So this right here is the Chief Hardware and Manufacturing Officer, so they did acquire some stock as well. So this one shows some outdated stuff, so back in June, August, and then most recently in September. So a little bit fail of a disclosure going there, but still it is what it is. This individual similarly in June and then in September, so more stock through there. And then last but not least, you had the CEO, so did acquire some stock. This one was pretty substantial though, so you see this one at 1.1 million and then 60,000 for there. So it is what it is. This is all voted on from last shareholder meeting, so nothing really new information. So again, it's kind of all planned. One thing that was more of a surprise was this S3 that came out on September the 5th. This S3 does show that they are registering stock, so not issuing new stock yet. So underline yet. So as of right now, it looks like they are registering about 3.3 million shares, a lot of which is dependent on if warrants are exercised or not, because that does show an additional around 555,000 shares. So that's part of their pre-funded warrants, but this is just selling stockholders. So if insiders essentially did want to sell, so the selling stockholders that are listed in this document, obviously they're linked to the pipe. Essentially it would go through this versus the open market. So they're trying to avoid any potential downtrend. This is a very common thing. So not by them submitting this, it definitely does not mean that the selling stockholders that are listed here are going to be selling. It's just more of a kind of an out, if that makes sense. So it happens a lot with many companies, and usually nothing amounts to this, but they do have to register the shares just in case. One new piece of information that this did give though was this. So as of August the 29th, 2024, there was 42.3 million outstanding shares. And potentially if those pre-funded warrants are exercised, it's going to jump up to 42.8, but still what we last knew, it was 39.6. So essentially that does mean that there was roughly around 3 million in dilution since the last disclosure. So nobody likes dilution, so that's one of the attributing causes, again, why it did go down slightly. Nothing really crazy. There's a ton of companies out there diluting to kingdom come. So in my opinion, maybe 3 million is somewhat acceptable. I haven't really followed obviously Serve's dilution aspect behind the scenes. I've just been more analyzing a lot of the data points at the time. So That's something I will continue to monitor, but aside from that, that is one thing that no doubtably did add a little bit of selling pressure. Starting off with shorts though. So because of that new update due to the outstanding share count, this did get adjusted quite significantly. So you had shorts returning, plus with that adjustment, because of course, 16.42% of the free float is being shorted. So if the free float number is getting increased, essentially, that does adjust the metrics behind the scenes. So new short interest is showing as 16.42%, 3.29 million shares overall are being shorted. Cost of borrow average is still fairly high, so 181.19%. On Friday, shorts did return around 465,000 shares. Utilization 77.34, and then short score, so the higher the number, the higher the likelihood of a squeeze happening, is sitting at 80.63. And just so you're aware, this short score number is comprised of utilization, cost to borrow, and just generally the number of shares being shorted. So let me know your thoughts on that in the comments below. These are some of the transactions that have been occurring over the last 90 days on the dark pool. So I've been bringing this up. Clearly, this is very much linked to shorting. So this is where shorts do go to hide a lot of their transactions. And then on the flip side, so these are some of the transactions that have been occurring on the secondary market above $100,000. So this is where you do see a lot of the entities are selling out. And clearly with this document right here, this September 5th, this S3, no doubtably that did cause some fear, because you do see a abnormal amount of selling. So based on the bid, the ask, and the selling price, basically everything that did happen on the 6th as well as the 5th were sells. So big money is kind of vacating the premises. It could also be because of just the broader market. There is a lot of fear in the market right now, like I said, and with this upcoming week, you have CPI and PPI. That fear could definitely get rolled over into next week. So again, something to keep in mind. Options, 59,000 in calls on Friday, 140,000 in puts. Fairly low dollar value, but 44% of all the options being done were optimistic and bullish. And as you can kind of see right here, of the call options that are purchased, or I guess were purchased on Friday, there's a consensus for it to be around that 750, so a little bit more of a recovery. And then looking at puts, you do see a consensus for it to be sub $7. So there's a little bit more downside anticipated. But as of right now, with it closing at 722 on Friday, it is trading between this S3 and this S2. So 676 is going to be that next strong support. It did bounce off of that general area on Friday. So most likely, given the fear in the market, it might be retested. So definitely watch for this S3 to hold. Flip side, $7.61 is going to be that next strong resistance / target. It was briefly above that on Friday, but again, just there's a lot of fear in the market. So anticipate a little bit more downside based on that. Looking on the actual chart itself, since my last video, it did break unfortunately below that 50-day moving average, and so for a momentum play, that's not a good sign, to say the least. So definitely watch for it to get above that. That's around $8.83. So you'll need a very nice recovery, at least in the short term, for it to get close to that. Looking at stochastic though, you do see it very oversold. So for instance, going back over here with that presentation tomorrow, if they do unveil a good piece of news, then you could see a rush of value investors getting into SERV, possibly. Again, with it oversold, definitely could, a lot of volatility is anticipated. Even going back over here, the fib levels, very wide gaps between any of them, so that does mean and equates to a lot more volatility in the foreseeable future. So just be prepared for that. So if you don't like volatility, the stock might not be for you. But as of right now though, you do see number of retail investors have been kind of getting out, not really doing all that much, all in all. So we'll just have to wait and see. In theory, this is just more speculative, of course, but they do, GameStop does have their earnings this week. If they do have maybe good earnings, it could cause a ripple effect through other heavily shorted stocks, and it could really benefit this. And so there was this movement that did happen roughly around 1 month ago. And so ultimately SERV kind of benefited a little bit briefly from that, but roughly, like I said, 1 month ago ish, you had a very abnormal spike in meme stocks and heavily shorted stocks. So once again, if GameStop does have good earnings, that could really help Serve indirectly. Again, take that with a grain of salt. So let me know your thoughts on Serve. Have you been buying? Have you been selling? What have you been doing? And what is your thoughts, for instance, on this S3, the Form 4s? Like, what is your take on just Serve in general? So don't forget to hit that thumbs up. And one final thing, take advantage of this promo. Simply sign up for a new account, throw in $100 at it. They give you 5 free stocks. Each stock is valued up to $2,000. This is a kick-ass deal. Link in the description below and also the comments. With all that said, appreciate all of you watching.